Hi everyone. Hope everybody is having a great day until now. Welcome to our FCRA webinar that is being organized by the Atma Network. So before we actually start with the webinar, let me show all of you a brief video that introduces and tells you a little bit about the Atma Network.
Often, a lack of resources and expertise prevent even the most high potential organizations from maximizing their impact. The Atma Network aims to provide strategic support to such organizations and social enterprises at a click of a button. Since 2007, Atma has worked with more than 50 NGOs in Mumbai and reached out to more than 80,000 beneficiaries. Through our experience, we have assembled a large collection of useful how-to guides, templates, readings, best practices, and examples. Enough material to create an NGO self-help library. And you get all of this for free. With Atma Network, you will understand at what stage your NGO is at present and which of the 10 organizational developmental areas you must focus on in order to become bigger, better, and stronger. Our hope is that by giving young NGOs access to this information, they can become more autonomous and accelerate their own growth. Interested in checking out the network? Sign up today and get started.
Great. So, as you've already seen, the Atma Network is a free online platform that that aims to support and guide NGOs in order to strengthen their internal processes and system. And what we also try is to connect NGOs on our platform so that they can do so much more through this peer learning and guiding each other as well. We also help organizations understand their progress and help them plan better. So, as a continuation to the same effort, we have started this webinar series where we try to solve the challenges that the NGOs are facing in different areas. So, as a first part of the series, we had done webinars on strategy planning. And today we have Mr. Suhail Goyal with us, who will be walking us through the financial compliances and the FCRA guidelines. So to tell you a little bit intro about Mr. Sohail, he's a fellow member of the Institute of Chartered Accountants of India, and only at the age of 22 he achieved his accountancy degree with distinction from American Institute of Certified Public Accountants, besides the degree of Chartered Accountancy from ICAI. Mr. Suhail oversees the personal and corporate tax advisory services besides advising issues relating to the cross-border transactions with special reference to double taxation avoidance agreements and advisory on foreign investments into India. He also supervises the firm's assurance, practice and litigation services before the tax authorities, Reserve Bank of India, Ministry of Home Affairs, FCRA, and seeking approvals from the Ministry of Finance, GIPP, FIPB, and Ministry of Corporate Affairs. With all, he holds a brilliant academic record, being a gold medalist at higher secondary education and a bachelor's in commerce with distinction from Delhi University. His organization, that is MS Sunil Goyal and Associates CAs, which was started in 1980, has its presence in New Delhi, Noida, and Mumbai, with a team over 250 professionals working for both domestic and personal clients. Mr. Sohail Goyal has been closely involved both personally and professionally with advising entities operating in non-profit sector for last several years. He's also been assisting NGOs with their needs of areas of taxation, assurance and general compliances, etc. Besides advising their entry strategy into India. In addition, he has been advising such entities for further needs to set up proper internal structures with a view to achieve long-term financial and organization stability. He has spoken and addressed NGOs at several such forums in the past. So, with much further ado, I would like to invite him to continue with the presentation.
Good morning. Thank you, Jigyasa, for the wonderful introduction, and to the entire audience for taking our time to be part of this webinar series which the Atma Network has started. I'm extremely thankful to the Atma Network for creating this platform which allows a lot of non-profit institutions to benefit, to try and understand what's really happening amongst different spheres, whether financial or even for operational matters. And at the end of the day, all these efforts through the Atma Network would only help the non-profit organizations to grow and to have a long-term sustainable plan. With this effort, what we had discussed with the Atma Network is to do a webinar which talks about a lot of the developments which are happening in the sphere of taxation, compliance, and a lot which is making noise in terms of developments in the non-profit space relating to the FCRA, which has been a sore topic with the change in administration very recently, and also to enlighten a lot of the network members about potential in terms of how they can leverage the various schemes which are going on and are being launched through the Niti Aayog recently promoted. So I'm just going to start with giving you an oversight in terms of what are these initial and the recent changes which have come through. These were the key three areas which we believe you guys would benefit in terms of a quick summary. Darpan is an initiative taken by the Niti Aayog, which has been recently promulgated in addition to the planning, rather to replace the planning commission. This was an effort which connects a large unorganized sector on a common platform. Uh, this platform allows the interchanging of knowledge in terms of what are the different schemes which both the donors as well as the donees can benefit from. Try and have one common platform where there's a lot of exchange of opportunities. This is something that I strongly advise a lot of you would benefit from registering with. I will touch upon this slightly more when we get into the later part of our presentation. Then secondly, the Lokpal and the Lok Ayukta Act, which was creating a lot of noise with the previous administration. I'm sure all of you are aware of the efforts made by Anna Hazare, where he single-handedly tried to create an institution which had which had been kept under the carpets for a long time. Finally, he did achieve success in 2013, and then finally the act coming into force from 2014. It has significantly been watered down from what Anna Hazare had initially proposed. However, there are still a lot of things are which are things which you should be aware of in terms of compliances. And then just to also give you perspective that with the change in administration, there has been a lot of hue and cry being made about the FCRA being a body or being an institution where there has been a tightening of control. The funds which were flowing through quite freely for the last several years, they've been sort of tightened. There have been a lot of cases where organizations have been blacklisted or registrations have been cancelled. So attention must be given to the details and the compliances which are there within the FCRA Act so that you can leverage the various benefits, or rather the huge donor base which is available outside India to the best of the organization capabilities. Compliances should be made under the FCRA. So broadly, these were the three key areas which you should be aware of. We'll obviously be getting into more details when we go through the presentation. Just to give you a very quick overview of what we'd be discussing today. This is a broad agenda of the things that we would be touching upon. Initially, just a very quick summary of the various ways that any organization can formally register itself as a non-profit undertaking in India. Then we move to the key areas of FCRA, Maharashtra Public Trust Act, or the MPT, the Lokpal and the Lokayuktas Act, which we would be discussing. Then the income tax issues, which a lot of the NGOs I'm sure may already be aware of, but just as a refresher, this would draw attention to things which you should be aware of. And then moving on in terms of the various opportunities which are available to the non-profit sector in India in terms of the government's partnership with NGOs. And then finally, what have been the key changes or the key developments in the NGO domain in the last few years, which you should be aware of. So this should broadly take us about 45 minutes, and the last 15 to 20 minutes we'll try and have a question and answer session. These are the three key ways where any NGO can be registered in India as a formal entity. Trust being the most simplest in terms of the creation and in terms of flexibility. Society being something which falls midway between the trust and Section 8 company. And then finally, you do have an option of registering yourself as a Section 8 company under the Indian Companies Act 2013. There's been a few changes even under the Companies Act because it has been recently coming into existence, but in principle, the key areas of compliance remain fairly the same. For your benefit, instead of going into specific details, we believe that this would be a quick summary in terms of a comparative note of the three options which are available and the key criteria which will help you choose which of the three options would be most suitable for your organization. In terms of the governing statute, the trust would be under the relevant state trust or the Indian Trust Act. The society, again, either under the states in which it's operating or within the Master Societies Registration Act. While under a Section 8 company, the Companies Act 2013 is one common legislation across the country. There are different registration documents under each case. In terms of the control, the trust and society are relatively lower in terms of the control, which is with the management, while with a Section 8 company, you have a much more watertight control mechanism which exists. Foreign investment is normally preferred only in a Section 8 company, while for trust and society, it might be possible, but those are not the common ways of going about foreign investment whenever you're looking to set up a subsidiary of a foreign NGO in India. In terms of the members, there are different limits which would be required as a minimum. Cost factors, obviously your trust and society are relatively easier and much cheaper in terms of creation, while a Section 8 company takes relatively longer. At the same point of time, the advantage with a Section 8 company is that you have pretty much been pre-approved as a charitable organization by one of the arms of the government, which is the Ministry of Corporate Affairs. And accordingly, when you approach other organizations for subsequent approvals, which would be for FCRA or for income tax, Section 8 company normally is the more preferred option since you already have a stamp of approval from the government. In terms of the other aspects of the flexibility, a lot of the options are reasonably flexible. However, when there is a question of change of registered office, it is not something which is very difficult, but each of the organization have its own sets of issues in terms of the paperwork which need to be done. Changing of objects is something which is fairly complicated when you're looking at trust or society, but a Section 8 private company also allows that ability, but with its own sets of compliances. Then finally, in terms of the transparency, with few amendments which are being made recently under the various Lokpal, Lokayuk, as well as the FCRA requiring the companies to disclose their financials online. there is a high degree of transparency, and the highest being with the Section 8 private company, because it is disclosing its accounts in a public domain with the Ministry of Corporate Affairs. This is a very, very quick summary of the variety of statutes which might be applicable. This is definitely not an exhaustive checklist. This only gives you an overview. I would strongly recommend that you seek professional opinion to your specific case, because a lot of these statutes differ in terms of their compliances and applicability to the different states under which you might be operating in India. But broadly, this would give you an overview in terms of what are the key essentials, at least, which would be applicable to your organizations. A lot of the acts would require filing of an annual report and submitting details of your governing body or the managing body from time to time. Majority of the acts would also require an intimation to be provided to the respective the respective statute whenever there have been any changes which are significant in nature, and you should intimate the respective authorities at the pre-described time intervals. Having said that, in case there have been any lapses, I would strongly suggest that you take professional opinion to correct these at the beginning rather than to be pointed out by the relevant authorities, which might attract any sort of penalties, etc. Moving on to FCRA, which has been a bone of contention and been a hotly debated topic across the entire spectrum of the NGO space in the last year or so. There have been a lot of changes which have been introduced in the last year, where some of the changes make life slightly difficult. At the same point of time, there have been flexibility which the government has shown in terms of digitizing and in terms of making transparency much greater of the FCRA. This is broadly a summary of the various topics we would be covering. We'd be trying and spending about 15 minutes on the FCRA as a topic. To give you a little perspective and background why the FCRA needed to come into existence, this is a key timeline which takes you back to 1969, when for the first time the Home Minister raised the issue of regulating foreign funding into India. The government was very rightly worried about what kind of influence foreign funding would have on the different arms of the government, various political parties, the other institutions which have been operating in India, and for any ulterior motives that a foreign investment or a foreign funding might be routed to India. Eventually, in the next 6 to 7 years, there was a lot of debate. And finally, the Foreign Contribution Regulation Act 1976 was enacted, which continued to function for several years. There was obviously, with the passage of time, a lot of noise which was created about how a lot of the provisions may not be entirely correct. FCRA was initially viewed as a fairly draconian law. There were various changes which were made from time to time. And then finally, in the mid 2000, it was sort of suggested that a new law needs to be brought into existence, for which there was a body separately created, and a bill was proposed in the parliament in the year 2006 to amend the 1976 FCRA Act, which came into existence. Finally, with the passage of time, FCRA 2010, which is the act that was enacted with an aim to regulate the acceptance and utilization of foreign contribution. It was also with a view to prohibit any activities which were detrimental to the national interests and for various matters connected thereto. And with the new government coming in 2014, it did make a lot of positive amendments to the Foreign Contribution Regulation Amendment Rules 2015, or loosely referred to as FCRR 2015. I'm sure this would give you an overview of the history of the FCRA. Moving on, the key things which you should be aware of whenever you're looking at the compliances under the Foreign Contribution Act is obviously the definition of foreign contribution itself. In terms of Section 2 of the FCRA Act, a foreign contribution means the donation, delivery, or transfer by any foreign source of any article, currency, or any foreign security. It does also include any income which has been generated from the initial foreign contribution given to the organization. In terms of the various explanations, the amount which has been received purely as a fee for providing a reciprocal obligation, that is excluded from the definition. Foreign contribution is something which you should be aware of, and you should spend a lot of time in understanding the definition correctly. The next aspect which should be taken into consideration is the definition of foreign source. This is a key area where there is a distinction. A lot of people tend to get confused about the foreign source being linked to a residential status of a person. Under the FCRA, since it's being regulated by the Ministry of Home Affairs, the concept of residential status does not have much relevance. It's actually the citizenship of the person which determines whether a person would be classified as a foreign source. So typically, if it's an Indian national which is staying outside India, even though he may be a non-resident from the point of view of the income tax or the FEMA provisions, but he would be considered as an Indian source for the perspective of FCRA. And similarly, if it's a foreign person or a foreign citizen who is staying in India, any donations from him, even within India, would be considered as a foreign source. So this is a key distinction which you should be aware of. In addition, for obvious reasons, any government of a foreign country or any sub-agency, a foreign company in its true sense, or a foreign corporation, a foreign trust, foundation, or a trade organization is also covered as a foreign source. There are exceptions which are given to international agencies, which are the UN, the World Bank, the IMF, and various such organizations which have been excluded from the definition of a foreign source, while there are certain companies which have been operating in India which were earlier covered as a foreign source. This is a key amendment which was being brought about very, very recently by the Finance Act 2016. Till this amendment, any Indian company which had more than 50% foreign shareholding, even though it was operating in India, was considered as a foreign source. However, to simplify this provision, the government proposed a retrospective change from 26 September 2010, where all such organizations where the nominal value of share capital is within the specified limits under the Foreign Exchange Management Act, which is FEMA, then notwithstanding the nominal value of share capital being more than 50%, such companies will not be a foreign source. This is a key amendment which the network should be aware of. Having said that, unfortunately, this definition, even though it has come in retrospectively from 2010, it is once again being reviewed because this is a matter of debate of jurisdiction between the Ministry of Home Affairs and the Ministry of Finance. You should wait and watch on what the final stand would be in future. But as of today, with the amendment in this definition, all Indian companies, even though they may have more than 50% foreign shareholding, continue to be an Indian source, and therefore FCRA would not be applicable whenever any donation is received from them. This is an overview of how you should approach compliances under the FCRA. Typically, there are two ways of going about complying with FCRA. Either you need to seek a case-by-case prior permission, or a blanket registration is available. This slide would generally tell you how and when the registration or prior permission options should be considered. And those which have been registered in the past, they must look at the renewal, which would be due anytime now or in future, depending on when they would have been registered. I would be going into specific details slightly ahead, so I'm moving ahead from this slide. In terms of prior permission, what you should be aware of that you need to be registered under the various options we discussed at the beginning of our presentation, which means a society, a trust, or a Section 8 company. You must submit a commitment letter from the donor indicating the amount and the purpose for which such prior permission is being sought for, and for obvious reasons submit a project plan for which you would be receiving this money and how you would be utilizing them in terms of the operations in India. There are various restrictions on how many times you can reapply and within how much time cannot reapply from an earlier application. They have been mentioned at the bottom of the slide, which would give you an indication. Moving ahead to registration, normally this is something which requires a track record which the Ministry of Home Affairs can verify. I'm sure you would appreciate that being a very sensitive area, the ministry would not like to give out registration app without any sort of a due diligence of the track record of the organizations. Therefore, they normally request for the organizations to be registered, be in existence for at least 3 years, and normally should have spent at least 10 lakh rather over the last 3 years on its core activities besides the administrative expenses which they may have done. You need to apply with a lot of documents which support your applications, your track record. There would be a proper due diligence carried out about your organizations. And finally, once you have been registered, you should keep in mind that you are not allowed to transfer monies to non-registered FCRA organizations without permission, as well as there are various restrictions on how to utilize monies between your domestic funding as well as your foreign contribution. And typically, you should not intermingle the funds. These may attract penalties, including cancellation of registrations. I'm sure you would have read in the newspaper here that there have been cancellation of a lot of registrations owing to such non-compliances. In terms of renewal, obviously the time period is linked to when you had applied for registration. Assuming that you have completed 5 years since your registration application, you do need to get yourself renewed. The common application for the prior permission, registration, and renewal is all under the form FC3. As I mentioned at the beginning of our slide, there have been various amendments which have been made through the FCCR 2015 and the Finance Act 2015. These have been summarized in this presentation, which would give you a perspective on what were the earlier provisions and the new provisions. Very quickly, to just generally advise you, the key amendments are relating to digitizing a lot of the filing which needed to be manually done in the past. Now you have the ability to do a lot of online filing rather than visiting the New Delhi office, which is where the compliances needed to be done in the past. Again, as I mentioned, you now have the ability to make online payments rather than submitting demand draft, banker's check in the past. A lot of the queries can be handled online rather than through personal visits or letters which were at times not properly addressed by the ministry. This is a key amendment which you needed to be aware of. Any organizations which have foreign contribution in excess of prescribed limits are required to keep their audited accounts in public domain, as well as on a quarterly basis submit these details either on their own website or on the ministry's website, so that the details of the foreign contribution and their utilization are available in public domain. Then finally, in terms of the last couple of slides for FCRA, what you need to be aware of is there have been any changes which have been done, whether in your name, address, your objects, the bank under which you have been designated to receive foreign contribution, or key members of your governing body, that needed to be intimated to the ministry within 15 days through filing of Form FC6. This is one of the key mistakes which a lot of the organizations tend to make. And therefore, when they're applying for renewal or for registration, there have been cases where they've not managed to intimate the ministry within appropriate times. I would strongly advise you to review your applications submitted for registration or prior permission and the current status of your compliance with those particulars prescribed. Moving on, the MPT Act, which is the Maharashtra Public Trust Act. This is something which is sort of restricted in terms of its compliance. This does extend to the entire state of Maharashtra, but it does also have limited compliance even to be done within Gujarat. We would be walking through some of the key compliances which need to be done within this MPT Act and various filings and registrations which need to be done within these provisions. As I mentioned earlier, the MPT Act is applicable to all societies, public trust, including temples and various other public religious worship places in Maharashtra, and with limited applicability also in the state of Gujarat. Once you decide that this act is applicable to you, you do need to get yourself registered with the Office of the Charity Commissioner. This is located at Worli Naka in Mumbai. Any application which is made for registration should be typically made within 3 months from the date of execution of your charter documents, together with various supporting documents, which would be in the nature of an affidavit, consent letters, and various other supporting documents of the application for registration. Moving forward in terms of the various changes which you must intimate the Charity Commissioner, any changes in terms of your trustees, the status of the movable or immovable properties owned by you, these need to be duly intimated to the Charity Commissioner. It is only up to his satisfaction that the changes would be finally recorded, and then a change report would be prescribed under Schedule 3, through which you need to intimate the same to the Charity Commissioner's office, and there would be 15 days to which you would get a time for the order to be received by you. I do notice that a couple of members from the network have commented about the sound not reaching them. I do believe that might be on account of the bad internet connectivity at your end. So I would assume the Atma network would try and give this presentation later in terms of a recorded presentation to all you guys. So I'm going to proceed ahead with this for now. Another key thing which you need to be aware of is that a budget needs to be filed by the end of February in Schedule 7A with the Charity Commissioner. This is a mandatory compliance which need to be done year to year. In addition, there is a prescribed format under Schedule 8 to the MPT Act, which your balance sheet, and Schedule 9, which would be your income and expenditure account, needs to be prepared. It must be within these prescribed formats. You cannot follow the general formats which would otherwise be made for your accounts to file with the MPT, which means the Charity Commissioner. Then finally, through a key recent amendment under February 2016, the charity commissioner does have the ability to deregister the trust or the organization on variety of the grounds which it believes, after giving a due opportunity, would be infructuous, and therefore the organization no longer has the ability to continue its status as a charity organization in Maharashtra. Finally, moving on to the Lokpal and the Lokayukt Act, this has been one of the key changes which have been brought about with the Anna Hazare movement, which started in 2011. There was obviously a lot of hue and cry which was going across the country with the huge corruption scandals which were being unearthed every other month during those time periods. There was a huge uprising against this corruption going through and eating away at the roots of the country. Finally, the government decided to introduce the Lokpal and the Lokayuktas Act in the year 2011. It did see a lot of debate going on in both houses of parliament, and then finally it was assented to by the president in terms of the act in 2014. The key applicability points on this would be that it would apply to all public servants inside and outside India. The definition of public servants has been duly given under the act. It would typically include any director, manager, secretary, or other office bearer of the society or the non-profit institution which is being covered under the MPT Act. Again, any organization which has been received a foreign contribution of more than 10 lakh rupees during the year, or other organizations which have received donations of more than 1 crore are required to comply and disclose the details of the personal assets as well as the various investments made by the public servants covered under the earlier definition. The disclosure would be in respect of the person himself or herself, which would include details of their personal assets and liabilities. In addition, it would also be extended to the spouse of the respective member, where he or she will also be required to file a return separately mentioning the same. Even immovable properties which have been inherited by the respective public servant, the details of the same must be disclosed within the ambit of the Lokpal and Lokayuktas Act. This is a quick overview of the form under which the disclosure needs to be given. All cash in hand deposits, investment in company, insurance policies, personal loans which have been given, motor vehicles, jewelry, and various other details need to be disclosed under the Form 2. This provision was initially introduced that by every 31st of July, the compliances need to be done. However, from a recent amendment which was done in July 2016, simply because most non-profit organizations were not ready in terms of the disclosure requirements, the government extended this due date to 31st December 2016. This continues to be a hot point of debate amongst the networks across the country. People are quite worried on how the government would be treating this information, whether it would be treated as confidential or the government would be taking any actions based on the disclosures made by them. Therefore, a lot of the non-profit organizations have not submitted such declarations or returns. But as of today, the deadline continues to be 31st December 2016, and you should plan to be compliant with these provisions. Finally, moving on to the income tax compliances, which you should be broadly aware of. I am not going into the details of the day-to-day compliances of audit, filing of returns, withholding tax obligations that you may have. I'm restricting my presentation to only some key areas which you should be aware of. There is a huge difference between a contribution which has been made purely for voluntary purposes as compared to a contribution which has been made towards the corpus. By a donation towards the corpus, you should have received a specific written direction from the donor that the donation shall be treated as part of the corpus of the trust. Since this is not available for the organization to spend as per their discretion, this is not covered as an amount which mandatorily needs to be spent within the year, and therefore this can be set aside by the organization towards future utilization and towards the future growth of the organization. You would be required to disclose under Schedule BC and Schedule J of the ITR 7 form of the income tax of such corpus donations, and accordingly any interest which has been earned on such corpus grants should also be covered and disclosed separately. In terms of the key elements, as I mentioned earlier, the specific direction should be accompanying the corpus donation. Any inter-charity donation which needs to be made should be along with valid application of the funds on the part of the donor organization. In addition, another key things which need to be kept in mind is any anonymous donations which have been received by your organization. They need to be within the threshold prescribed, failing which they would be taxable. And since they have been taxable, there would be consequent implications in terms of how they would be accumulated in future. This is just a representation of the Schedule BC from the ITR 7 form. You would notice that the corpus donation and the voluntary contributions need to be separately denoted, as well as the foreign contributions which have been received during the year have to be separately identified, and therefore there is a possible interlinking between the Ministry of Finance, which is the income tax authorities, and the Ministry of Home Affairs, which supervises the FCRA compliances. Then finally, in terms of the utilization of monies received by you, there could be various reasons why you may not have been able to use the entire monies received by you during the year. The income tax department does allow you flexibility of accumulating them in subsequent years' utilization. Obviously, you need to intimate the government in terms of a Form 10 or Form 9A, depending on whether you have received the money or you may not have received the money during the year. The compliances need to be made by the due date of filing of your return, and then in subsequent years you would have the ability to utilize these monies for the objects for which your organization has been created. Again, there has been an amendment under the section 215 of the Income Tax Act. My apologies, the figure mentioned here of INR 25 lakhs has been wrongly mentioned. It should instead read as 20% of your total contributions. Under this definition, what the government is allowing you to do is that if you're getting any monies which are being utilized for objects which are ancillary to your main object, but otherwise may be treated as sort of business activities, within those prescribed limits, you do have the flexibility to have certain ancillary objects being carried out, which would mean, let's assume that you're an education institution and you're selling some books, or you're renting out your auditorium to others, and at the end of the day, those monies are being utilized for education as an object. These would be covered as ancillary and may not necessarily attract the tax authority's implication of deregistration or cancellation of your registration. Finally, moving on to virtually the last part of our presentation, which is the government's initiative in terms of engaging with the non-profit organizations across the country. As I mentioned in the beginning of our presentation, Niti Aayog had come out with this initiative, which is Darpan. The NGO Darpan is basically an online platform which allows you to get details of the various voluntary organizations or NGOs registered across the country. You can get details of the various schemes which have been rolled out by the various ministries, departments, or the various government bodies. You can apply online, which would allow you to have registrations on this website after getting due diligence being done of your organization, and then accordingly leverage the benefits of being on this platform. In terms of the specifics, I'm sure you can log in directly to the website and understand the process. It's fairly simple. You do need to create your own user ID and password, select the scheme under which you need to apply, and then get details of the nodal officers which are governing the scheme. This is just a quick example of how a scheme which has been loaded on the website looks. This does allow you the flexibility to understand for what purpose you like to register, either to grant money or to carry out the project within the scheme. Then finally, the last absolute bit of our presentation, which is in terms of the key changes or key bits of items which you need to be concerned about. A few things which I did touch upon very briefly, but just to reiterate so that you do take this as a key area to discuss with your financial key controllers in the organization. Any organization which has been registered under the FCRA need to keep in mind the object for which they were registered and not carry out activities outside the registration object. Also, not more than 50% of the total contributions received by you should be utilized for administrative purposes. Then another key change which the government is bringing about is the monitoring of the FC utilization, which means whether the intermingling of funds between the domestic and the foreign designated bank accounts is taking place. You should, to the extent possible, absolutely avoid such intermingling. And then obviously you should not transfer any foreign contributions to non-registered FCRA organization without seeking prior permissions. And then, as I mentioned earlier, you must regularly intimate the ministry for any changes in your governing body, the name of your NGO, the change of address, or any bank accounts before you actually act on those items. Then internal control, this is a key area where we have been advising our clients and a lot of the NGOs that we work with. With the growth of the operations, internal controls at times do not tend to be applicable or do not continue in the manner in which they were initially brought about. I would strongly advise each of the members here to review the internal controls which are prevalent in their organization. You might want to bring about the advantages of technology, which means there are various softwares which are available, which allow remote participants of your program to upload their expense statements, which are properly then reviewed. And there is a proper mechanism of approval which has been brought about. In addition, you should, to the extent possible, entirely separate the books of accounts which are being maintained for your foreign contribution and non-foreign contribution funds. I would even suggest that separate bank accounts be maintained for each of the projects which are being undertaken by you to have absolute clarity. The end of the day, if your internal controls give confidence to your donors, it would allow donors to give you more monies in future, and you would continue to command a greater amount of respect with the donor space in India as well as outside. It is always advisable to also carry out regular interim audits in addition to the statutory audits which may be carried out at the year end. In essence, what I'm trying to suggest is the stronger the internal controls are, the more stable your organization would be, and in the long run, the more sustainable the objects for which it has been created, the organization would continue to serve those objects. This is the presentation which I could try and cover in the limited amount of time that we do have available. I now leave it to the Atma network and the organizers to go ahead and have the question answer sessions. I would try my best to address questions to the extent which is possible. I do apologize in case the time is short and we've not been able to address all your questions. We would be happy to separately engage with any of the participants on questions that they may have. Over to you, Jigyasa and the Atma team. Thank you.
Thank you so much, Suhail. We can start. We can actually start with question answers quickly now. A lot of questions have already been asked in the chat window, so we will be taking them first. And if any of you have any other questions, please keep typing them in the chat window. Whatever, since we're left with only 10 minutes now, so I think we can take only a few questions now, but like Sohail mentioned, we would send you the answers to all the questions through emails, through a follow-up email later. So let's just quickly start with the first question. The first question was from Manhar Gurjar saying, can one person be as chief functionary in two organizations?
To the extent possible, we do not have any such restrictions under the FCRA. There have been no clear guidelines which prohibit a person to be a chief functionary in more than one organization. So I would suggest that you could proceed. However, whenever any such declaration is being made under the Lokpal and the Lok Ayukt Act, you should mention all such organizations to which you have been associated with for the purposes of proper disclosure.
Okay, great. So I hope your questions are answered. If anybody has more follow-up questions to Suhail's answers, please just type them in the chat, but we are still going to go in the order the questions were asked. So the next question was again by Manhar Gurjar, and it was, can we use one FCRA project funds for other FCRA projects?
I would strongly suggest that that should not be done. It is a question of the donors and your understanding. The government per se would not interfere. If your donor allows you the permission to use their funds for any other objects which are slightly similar, then you may be allowed. However, you should have a process where you do not intermingle funds between the two projects.
Great. So if you have follow-up questions, please keep typing in. Next question is by Tushar, which is, if we receive funds from foreign donor, can we return the funds back to them, considering the fact that we can only transfer funds to those who have FCRA registration?
Just to answer this question, you obviously have the ability to return the monies if you've not utilized them for the purposes for which they were intended, or the monies have been received slightly later. So I would suggest that you have proper, again, disclosures made and return the monies rather than misutilizing them.
Okay. This is a question from Hansika. She is from a non-profit organization, is trying to get FCRA. Her question is, how difficult is it to receive an FCRA registration on a per project basis versus for multiple projects for a Section 8 company?
So to address that a little more technically, I would suggest that in case you do not want to get a registration, you should approach prior permission as an alternative. Under a registration, it is a blanket registration which is not linked to the donor's specific. So in case you've applied for registration, you're allowed to receive the monies from any donor whatsoever. There is no distinction. And the prior permission, it is linked to the donor and the object. In this case, I would recommend that you should approach the registration option rather than filing 3 independent prior permission applications. The registration is not difficult provided the correct process is followed and provided you get the right professional advice. In most cases, we've noticed that only on account of missing information or submission of application incorrectly made or not supported by proper documents do follow-up queries come. If all documents are properly submitted, then normally it does go through in its regular amount of time. I do appreciate that there have been substantial delays at time from the ministry in processing of application, but that's simply because this is a very sensitive area. And if you've been following the news over the last few months, there have been cases where organizations have misappropriated or misutilized the monies which have been received by them.
Okay, great. I'm going to take next question from Neha Jha. Her question is, Lokpal Act is applicable to staff person drawing salary of more than rupees 10 lakhs. Is this confirmed?
There is no such guidelines which would determine the salary limit. If you want to refer to the people which are covered, I would suggest that you go and review the Act itself. Under section 2, subsection O, the definition of a public servant is mentioned, which is cross-referenced with section 14 of the Act. And under the review of these two provisions, there is no such guideline which talks about the salary limits which are being mentioned. So there is a lot of general rumors or general assumptions which are being made, but these do not find statute backing for them.
Okay, great.
Just to add further to this, you might have got confused with the 10 lakh limits which is there, which is about any organization which receive more than 10 lakh rupees as foreign contribution. Such organizations, directors, managers, secretary or other officers are covered. This is the only possible link to the figure 10 lakhs which is with me right now.
Okay, great. Next question is from Rajendra. Can FC interest be used for FC projects?
Yes, the FC interest can be used for the respective project. However, you should keep in mind that when your books of accounts are being maintained, the interest is being credited to the respective project from which the interest was earned in terms of the bank deposit or surplus monies which may have been temporarily parked.
Okay. So the next question is by Tushar. What is the change in key members to be intimated by MHA, and can you also share the definition of the key members?
So there is no, the word key members is not used in the FCRA Act. It talks about the governing body members which would be there of your respective organization, which would mean the trustees, which would mean the society members or the board of directors if it's a Section 8 company. If there is a change in more than 50% of such members, then you are obliged to intimate in Form SC6 with the Ministry of such change.
Okay. So we are going to go with just one last question now because the time is running out. Can one organization having FCRA account can give the donation to another organization without having an FCRA account?
Absolutely not. This would be a clear violation of the FCRA provisions. You are not allowed to transfer monies to any other organizations which do not have an FCRA registration. However, you have permission to transfer such monies, but again, that would be with prior permission and not after transferring the monies to the organization.
Okay, great. So thank you so much, Sohail, and thank you everyone for joining this session. We have a lot of questions in the queue and we will make sure that we answer all these questions. What we will additionally do, we are sending out a feedback form right after the session. So there is a comments box. If anything that's missed out, you can please type in your questions there. And plus, if your questions are not answered here and you want to mention them again, please type in that feedback form, and do also let us know more about the session and how you like the session. We will also include Mr. Sohail's organization details in the form to reach him. You can also contact us anytime. If you want to get more updates from us, please like our Facebook page, our LinkedIn page. You can sign up on our newsletters, or you can just email us and we will include you in the list. So thank you so much everyone for making up for this webinar. Day ahead. And thank you so much, Suhail, for helping all the attendees on the FCRA guidelines.